The week after the big ice storm, Portland Metro real estate bounced back as expected. However, there is a worrying trend for sellers regarding the supply of homes for buyers to choose from. And on the other hand, I think that the current interest rate dynamics are probably going to be good for sellers and a mixed bag for buyers. Let's get into the latest stats and trends. The average sale price was down about 3% from the previous week, but we remain just a tad higher than last year at this time, just 0.7% higher. You can see in this graph that the average is trending down right now, but that is typical for this time of year. If the average doesn't start increasing this next month, then I think we'll have a problem and something more to talk about. Our supply of homes available for buyers to choose from decreased by another 1% versus the previous week. However, the supply isn't falling as fast as it was last year at this time. This is the one worrying trend that I mentioned at the start of the report. We now have about 17% more homes for buyers to choose from than we did last year at this time. The week before that, the difference was only 15%, and the week before that was only about 12.5%. So you can see the trend here. If buyers don't jump back into the market this spring, as I suspect that they will, then this trend will likely put downward pressure on the average sale price and current homeowners' equity. The number of price reductions and the number of homes that hit the for sale market were both up this week, but we were expecting that after that winter storm put buying and selling activity on ice for about a week. The number of purchase agreements signed by buyers and sellers was way up for pretty much the same reasons, but the number still fell a little bit short of what we saw last year at this time. I am very curious to see what happens with that number over the next week or two. I think that it's going to be pretty telling and probably pretty informative of the spring market that we should be expecting. The number of bank-owned and pre-foreclosure homes inched down a bit, so really not much to report there. On average, sellers had to discount about 4% off of their original asking price in order to secure the successful sale of their home. That's a little bit better than last year at this time. The big news this week was in mortgage rates. Last week we're at about 6.375% for the 30-year fixed, best case scenario, and we're expecting rates to increase to at least 6.5%. Well, the Fed board did meet this week, and even though they didn't drop the Fed funds rate, they did deliver a pretty positive message with a lot of confidence behind it. As a result, the yield on the 10-year Treasury, our best indicator of where mortgage rates are headed, started to fall, and I saw the 30-year fixed mortgage advertised for as low as 6% on Thursday morning, and I wouldn't be surprised to see it drop below 6%, maybe even as soon as Friday. If that does happen, I think that will bode well for sellers in terms of protecting their home equity. I think it'll be good for buyers who have been dealing with some serious affordability problems, but based on what we saw last year, when rates dropped into that 5% range, it energized our market. If that trend continues this year, it could pull a lot of potential buyers off the fence and back into the active market, increasing competition among buyers and making purchasing a home more difficult and potentially more expensive. So definitely check in with me next week at this time to find out what happens with mortgage rates and what that does to Portland's real estate market. And to make sure that you don't miss that update, please be sure to hit that red subscribe button and give me a like if you found this content informative. It really does help me out. Have a great weekend, and I will see you right here next week.